Good evening, everybody. This is Jeff Scott, and sorry I missed y'all last week. It was my birthday, and my wife took me on a trip down to Florida, go to a concert, and go find a new condo to live in. The lack of state tax in Florida remains a very attractive option. So, for those who've not been here before, welcome. For those who have been here, welcome back. I am using it's a 1900 by 1080 or 1100 screen, and I am also not using the phone. I'm using the integrated audio. So if it's tough today, I apologize. Makes a big difference on my end to not pay for a phone bill in my hotel room. And my cell phone I don't trust. So we'll go ahead and give it a shot. Hopefully do this in about 40 minutes, as it is on the East Coast now. It's where I woke up this morning, so at about 1:15 a.m. Out in California, where it's only 10:15. My email address is there for contact purposes. As usual, the disclaimer: this is for educational purposes only. Anything I recommend is in the spirit of education and not investment advice. I'm a doctor, not a broker. And although I am close friends with the people behind HGSI, I'm really not, from a business perspective, affiliated with them or any other software vendor. I pay for the tools that I use, and I do this for fun, but I really do it because it makes me a better trader. By talking to you, it forces me to look beyond just a quick flip-flopping through, and I found that this made me a much better trader. So thank you for helping make me a better trader. I have a lot of programs. I purposely hide them on my desktop because they can become a distraction. People have been here before saying get to the charts, but just for those that are new, I need a real-time program. I'm happy with both TradeStation and Thinkorswim. I need something for analysis that I do when I'm on airplanes or aftermarket, of which HGSI is the best program in the market, which I'll show you. I use EdgeRater for back testing and also from a market understanding purpose. ETF Bandit applies some of the Connors and other techniques to ETF trading. I'm a fan of seasonal analysis, and I probably won't get to it tonight. And then Woodward and Brown really are where I've learned much of what I've learned from. Speaking of what I've learned from, I'm not a guru. I'm just a regular old trader. I've had the opportunity to sit and listen to a lot of smart people and been influenced by a lot of different folks. Ian Woodward on the left and Ron Brown are the Woodward and Brown folks. But much of what I do is based on what I've learned from William O'Neill, Morales and Katcher, the O'Neill disciples, Alexander Elder, Pastor William, Value and Time, about the big volume, Dan Tharp, position sizing, and money management, Ronald Grunke, how to make money on a fixed income, selling calls and puts, and then my candlestick guru is Steve Bigelow. Some of the websites are here. You know, stop the movie and write them down if you want to. I'll talk about things that look interesting. I have no idea what the market will do tomorrow, although it's in the wee hours of the morning on the East Coast. The futures are quite flat at this point. So all I'm going to look for are stocks that might be directional, that I think may be going up or going down. And then what I'm going to do is watch the market tomorrow when I can, and perhaps put some orders in tonight. I saw a couple of things that I'd be interested in buying if certain things happen, perhaps within Thinkorswim. And maybe if I have a chance before it gets too late, I'll show you how I do that. And basically, I'm a top-down investor, so I have to know what the market's doing tomorrow, what sectors are breaking out and leading. And then if my stocks are in those sectors and they're pointing the same direction as the sector and the market, then I get excited, and then my setups will help me figure out what I'm going to buy. So all I'm doing is looking at a list to narrow down the 8,000 stocks to 40 or 50. So tonight, as usual, I'll stick on the left. I'll look at the week in review and look about what's going to happen this week. Approach my top-down from market, industry, and stocks. Show you a couple of shortcuts I use, and perhaps go into some of the other programs, but probably not much of that tonight. I mentioned Ian Woodward and Ron Brown, and really, these are great guys. Don't know how long we're going to have them doing the live education, but just here's our futures, as you can see, pretty flat right now. When we go into the Woodward HGSI, I'm just going to go very quickly, hardwarestock.com, and point out a couple of things to people who are new and not so new. First of all, it's a 30-day trial, free, no credit card required. We can be up and running and repeating most of my keystrokes within a few moments of signing up. It takes a while to learn this program. The power, I'm still learning the program, but once you get a few basic things down, I think you can get a lot of value out of it as you learn the true power. One of the best ways to learn is coming to a seminar, and Ian and Ron, March 23rd, 24th, 25th. I think it's $12.50 this year, whatever. You get fed breakfast for 3 days, lunch for 3 days, dinner for 1 day, and you get fed the best healthcare. That's my day job. The best stock investing information you're going to get anywhere. These are just great guys, and I've been very fortunate, as have others, to have learned from them. If you go on the website under support, under Learning Center, if you have not, if you download the program, you need to scroll down to the add-ons, and you need to add, to get your charts to look like mine, you're going to need to follow the rules here and import these two settings, which updates the program so that yours will look a lot like mine. In addition, in that Learning Center are a number of webinars, obviously many by me, but by others as well. And great way to learn this type of investing strategy. I thought that my New Year's one had a lot of neat things in it. Look back at some of the things that we rely upon and did some back testing. On the report side, Ron Brown gives a free report every weekend. Well, most weekends, as you can see, he's been pretty good of late. Good's not the right word. He's been pretty helpful and generous of his time of late. He doesn't charge for these, and talks a lot about how to use the software to maximize it and why he thinks, and I agree, it's the best product out there. And when I do these lectures, they end up getting placed on the website as well for you to download if you want, and you can watch them. On slow internet today, not fast internet, so I guess it'll take a while for them to populate in there. So basically, yeah, slow internet, there you go. Oh, whatever, it doesn't really matter. Let me shut that thing off so I don't use it being my bandwidth. Leave on my futures, shut this off, and let's drop down here. So as I said, I'm a top-down investor, and I always like to get a feel of what the market is doing. So one of the tools within HGSI, I'm not going to do it, I'm just going to show you what the tool is. In the designer group, you can, and I'll do a real quick one just to show you what I'm talking about. There's a tool called the Group Inclusion Report. And what it does is it allows you to identify groups that you may have put together of stocks or other things, and then measure performance over a period of time. So what I'm going to do is I'm going to clear everything. I'm going to look at the Major Markets Plus, which are a number of indexes that we'll be looking at later. And I don't want to, sorry, my bad. The Group Performance Analysis. We'll do the Group Inclusion Report as well. So the Group Performance Analysis, rather, I'm going to just pick that. Go down here to Woodward and Brown User Groups. Sorry for my flub there. I'm going to clear. I'm going to hit that, and I want to know the performance over the last week of the major markets. So I'm going to assume I spent, I'll think of $50,000 in each one. I've never done it on the major markets. I assume you could do it on this. And round all share, okay, compared to S&P 500, and I'm going to assume that I bought things at the close of the market on the 1st, closing price, and sold them on the 8th. And if I hit OK, it should show me the performance, market performance, GPA 2.8.13, call it whatever you want to call it. And it doesn't like my little thing, so let me put this actually, I'll just kill that. So what it should give me is a list of everything that was in that directory, and I had a filter on, didn't I? Okay, so it broke down all the different major markets together, but here's what I want to look at. So here's the different indexes that we look at, and I'm going to look at them tonight, and it shows me the performance of the major indexes over the last 7 days. Had I sold it or bought at the open on Friday the 1st, and bought at the close on Friday the 1st, and sold at the close on Friday the 8th. And you can see the market as a whole. The leader was $1, up 1.39. Treasury bills up 1.37. Volatility up 0.92. That would predict a bad week for the market. The NYSE composite was down 0.33. That's a nice broad-based one. Russell 2000 was up about 0.27. S&P 1500 0.35. Small caps certainly looks to have continued to be doing well compared to the others. S&P 500 down, up about 0.31. So not a lot of action last week in the indices. Then I like to look at a number of different groups that I follow. And one of the nice things are they say that as an HTML file, you can import it into Excel. So I look at a lot of different groups to try and get an idea of what things were working. BGU stands for Bible gap ups, green candle lows, and those have been doing this for a while now. That I've become a very big fan of these green candle lows, and every week it seems to be a leader. Now, interestingly, the green candle lows were 50-50 this week, 6 wins, 6 losses, but as a rule they were up 1.59%. So when you consider that the S&P is up 0.3, that was a nice move. Now, I only look at green candle lows from the beginning of the week because the assumption is that they're bottoming and they're going to move up. The opposite we look at are called red candle highs. And you can see the red candle highs on Sunday. There were many of them, and they underperformed the market, and they were down for the week 0.23. Those are some of the reversal signals. Now, green candle lows from Wednesday had a horrible day, and you can see they were down 1.24% the last 2 days of the week. So if I also take a look, I see IBD 50 was up 1.59, really had a great week. The HGS 100, which is a little bit broader, was up 0.67, still much better than the S&P 500, which was up 0.3. And I had sort of a totally nothing week. And again, I don't stay in my stocks the whole week, and I have a balanced portfolio with some shorting and some hedging. And my portfolio was totally flat for the week, which is what it is. Now, that implies that I didn't do anything, which is not the truth. I did some trading during the week. And so my performance for the week doesn't necessarily look like the stocks from 8 days ago. So GPA gives me a sense, not a booming market, mostly flat, more up than down, the black versus the red. And that's all I get out of this slide, or this picture. So now I'm going to go and I'm going to look at the market itself. And so I'm going to go into the warehouse view. Here it is. I did not want to do that. Love that. Okay. I'm going to go into the warehouse view, and I'm going to go down to that Woodward and Brown user group, Major Markets Plus, and then I like, as I've talked about before, top-down view, which gives me all technical price and volume, but giving me mostly weighted on the last couple of days, but not as far as 3 weeks. So what do I see? I mentioned strength in the small stocks. And you could see continued strength in the market, and that balanced, all technical, heavily weighted towards the short term. You can see the small cap 600 and NASDAQ leading the NYSE, which is balanced, has big and small stocks at the top. And then sort of opposite what the week's performance was, volatility, so we're not, was down 3.6% on Friday. So from the top to bottom, still strength in small stocks. Let's take a look at some of these things here. So I like to look at the NASDAQ, the NYSE, the S&P 500, the Russell, and the 1500. So let's start with the NYSE. And I like looking at the NYSE because it's 4,500 stocks, and it is a mixture of big, medium, and small stocks. And it's a nice thing to understand. For those who haven't been here, very quickly, I will refer to this. Green is good, red is bad. These are some momentum indicators, and I forgot about that flashing. I can fix that. So these are momentum indicators on the top. This is the high jump bar, which is one of my secret weapons. And the high jump bar, when it gets to the top, it's extension from the moving averages. And from a high, at the top of the bar, it's high compared to previous. And when you get an extended rubber band, it snaps back, and so does the high jump bar. So you could see that the NYSE is living near the top of its high jump bar. It's gone sideways sort of for about 8-9 days, and it's near multi-month and frankly multi-year highs. So do I see any weakness in this chart or anything to be concerned? There wasn't much volume on Friday for whatever that matters. The Bongo daily is red, and that's consistent with a little bit of a pullback. The weekly remains green, which is nice to see. So at a point where I'm concerned because a high jump is high. It's got the 8-day exponential above the 17-day simple, the 50-day simple, and the 200-day simple. So that's the lineup I want to see in a bull market, running up the 17-day, which is a sign of strength. Down here, I see Eurekas, which are green. Phoenixes would be red, and they would be in the setting of sometimes I get too much on my charts and I lose my Phoenixes. I think I may have lost my Phoenixes on this one. But you'll see a Phoenix, which is the opposite of the Eureka, which is our follow-through day. And then down here you see Kahunas, reds. Pinks are a little bit down Kahuna. Deep red is a big down Kahuna. Light blue is a little up Kahuna. Deep blue is a big up Kahuna. And these have to do with movement within a Bollinger Band. More momentum indicators in HGSI land. So it makes me stand up and notice the stock. And then if you're a fan of Morales and Thatcher, pink is a pocket pivot down. Blue is a pocket pivot up, and if you see a green bar in this one, then that counts as a viable gap up. So NYSE going sideways of late, near high jump bar, and you can see the high jump has actually come down as it's gone sideways. Looks strong. I know we're near the end of a move. It's time for a correction. Maybe we get just a pause. This still looks pretty strong. If I go down and look at the NASDAQ, yeah, I'm definitely not picking up my Phoenixes. So let me just go back to the kitchen sink. That's what I'm going to do. Well, maybe not. All right. I'm just, sometimes when I switch computers around, I end up putting too much on this. And the problem here is I think I've got too much on this, and that's why I'm losing it. So I'm going to stay here because the Phoenix and Eureka are on the market. The things on the stock all seem to be fine. So the NASDAQ, similar to the NYSE, except the NASDAQ is kind of at a point where it's reaching its highs from September, and it's also at multi-week, multi-month highs. Had kind of a hammer pattern on Thursday. He gapped up on Friday. We know Apple moved up some this week, which probably makes a big difference in the NASDAQ. So a little bit looser than the NYSE looked like. Right makeup of the moving averages, not near the top on the high jump, high, but not all the way up. Everything green on the momentum indicators. More volume on Friday than the NYSE compared to average, and a Kahuna, a very strong day for the NASDAQ on Friday. We take a look at Russell 2000 is an index of small stocks. No volume here. And you can see again, kind of similar to the NYSE, almost a 45 degree, I don't know what kind of angle you call that, but a very nice move up. And we measured it last time, and measured a couple of times. In fact, let's just get an idea of how far we've moved up on this to get an idea of why one would be concerned that eventually got a correction coming. So from the lows in mid-November to the closing high, which looks like we closed down the high on Friday. Let's take a look at that. High 914, closed 913.67. We're up nearly 20% in the last 56 trading days. That's a pretty monster move. A good year in itself, occurring over a short period of time. This gray bar is a Phoenix, and you notice at the low you had a negative on the high jump bar. Phoenix is sort of our throw the baby out with the bathwater day, followed by a Kahuna, Phoenix in the general market, and it hasn't looked back. So again, breaking out to multi-month highs. No volume kills the force idea there. High jump near the top, but certainly very strong. Again, all these markets are extended, alternate risk of selling off at some point, but frankly, they all look remarkably strong. S&P 1500, we know it had a flat week by definition, but we also can see on this that it too has had a very nice run up. And from the lows on the green candle low there to the green candle closing high, we have a 13% return. Whoops. About 13% run over 56 days. Another very good move. Now, as I've mentioned, I like green candle lows. This is a green candle low. By definition, it traded below the low of the prior day. So it opened. I assume it traded down, took out the prior low, traded up and closed above the open, so hence a green candle. Low meaning it set a new low, and it closed within or above the prior day's candle. So those are one of the turnaround signals that I like to look for that are being hard-coded as we speak into HGSI. Now, take a look at some of the other things I like to look at. The S&P 1500 very quickly should look a lot like the NYSE, which it did, a mixture of the 500, the 600, and the 400, the small, big, and mids. And you could see another nice run breaking out to multi-month highs. What's not making highs, let's take a look at volatility. And as you can see, every time it seems to get a move up, it can't get above that 50-day moving average or the 200, or it comes back down. Still pretty low, so sort of a failed rally at the beginning of the week, and the market was soft, and the VIX sold off as the week ended up. Tons of activity in refineries this week. So if we look at oil, oil has certainly gotten above the 200. It's traded much higher here. You know that it's in the 90s. If one looks at gasoline, you'll probably see gasoline looking very strong, because, consistent with what we're seeing in the refiners. That chart has been repeated over and over again. And if you've been on my prior calls, hopefully you had some refiners, which we'll look at in a little while. We'll take a look at gold, silver, and move on. You can see there the bottom dwellers here. So gold can't get away from this 200-day moving average. Now, if you're bullish on gold, because all the printing presses that we had, we got a big squeeze here with all the moving averages within just a couple of points, probably within about 2 points there. And certainly at a nice place of support here. A little calamity in the world, a little bit of inflation, maybe this becomes a springboard for gold to go up. Then alone, I love listening to the commercial a few years ago when gold was $300. So, and remember, these are these spiders. So the price of gold doesn't have to add a zero to it. Silver, which has a little bit more volatility, perhaps than gold, is up a little bit, but it's sort of living in between its 200 and its 50, and also not going anywhere. So that's how I would look at the market from the top-down approach. I like to sometimes confirm my thoughts by going into another program. This is TradeStation. So let's just take a look at the NASDAQ composite using TradeStation and putting some of the Alexander Elder indicators off. You know, last time I've been concerned about some negative divergence in the NASDAQ. Let's see, I'm on slow internet today, so God only knows how long it's going to take. So I'm thinking I'm going to come back here because I don't know how long it's going to take to print. So let's go now and take a look for top-down investing about which industry groups seem to be doing the best today or this week, and where might I want to put my money. So on a top-down view, you see that we've got 146 different industry groups, and the top ones are casino and gaming, movies and entertainment, home entertainment software, and then a lot of energy stocks. Now, this has given me a nice picture over the past 3 weeks or so. So what I like to do is take a look at what's moving now and look at a 2-day force up. So this is only looking at today's close minus yesterday's times volume with a plotted daily with a 2-day exponential moving average. So these are things that are moving now. And you can see as we look at this, and maybe stand back for a second, a couple of things should hit you. Casinos are strong, we're going to look at them, but oil, gas refiners, equipment and services, exploration and production, and drilling, and storage. So you got the entire oil patch sitting right up at the top. And I think I talked about 2 weeks ago how I was starting to see a lot of services stocks like Halliburton, Schlumberger, and drillers, Patterson, moving up to the top. And when I start to see a lot of things in the same sector sitting in one place, I get a little bit excited, I get a little bit interested. So what I like to do is put a top down. I rank them from best to worst. These are the ones that were up. I do a right click, change the index group, and we start with Caesars. Now, I missed this puppy. I know that my friend George Lee probably made a killing on it because he was telling me about it. One of the problems is with the day job is I have a day job. I've been watching the stock for a while, and the rest of the gaming patch started moving. It's cheap stock. Was a cheap stock. You could see you could have picked it up in November in the $5 range, which was about the time I was staying at the Caesars in Vegas at the Traders Expo. It got above the 200-day moving average. We tested, and then huge volume came in last week, Thursday and Friday, a Bible gap up on Friday. Everything turned green. You can also bring in earnings per share here. Doesn't make any money, which is another reason why I would not have been in it. But what a big run. This orange salmon bar is a sign of a topping stock. It's another way. I'm testing. It's a high jump equivalent, looking at extensions with Wilder RSIs and other things. So very strong stock. Bible gap ups. I'm reading, trading with the Morales and Catcher guys. It can be a sign of going on a run. You can see on a weekly chart that it still has a way to go to get to its 2012 highs. So here's one that's been clobbered. Had a huge day on Friday and Thursday. MGM Resorts. I like this chart a little bit more in that it based for the month of January. Had a pocket pivot. Big volume on Friday. Everything turned green. Probably be worth checking the news. You do a right click and you go down to more info from the web and pick your favorite. I'll pick FinViz. It'll open up FinViz to this stock automatically. And boy, I hope this is coming out because this is really slow internet here. Why gaming stocks pop. So you can read Motley Fool if you want on higher Nevada gaming revenue. So I guess making more money. Right click on that right arrow. Melco, this is one that's a Macau franchise that I'm a holder of. And this one has been such a lovely one, picking it up on the 50-day moving average, which also called free parking in HGSI speak. Shallow pullback here. Looks like it's going to run again. And even the big guys, Las Vegas Sands and Wynn, have been having nice runs over the last, since the beginning of the year. Popped from the fiscal cliff, and it's kept on moving up. So that's the gaming stocks. That's where the big strength is. If I right-click and go back. Home entertainment software. Now that one scratched my head, and then I looked at it. I don't know if this was a buyout, but Activision had an 11% day. Must have been beat earnings on Friday. And you could see here not much in the way of earnings. From a dollars and cents perspective, a lot of negatives. So a stock that's in potentially a turnaround scenario was living below its 200-day moving average, broke above it, held, and then had a couple of kahunas in the last week and a huge volume day on Friday, most likely. And we can take a quick look and see. Strong results lift gaming gloom. So perhaps it's going to lift an entire sector. We'll take a look. Take-Two Interactive, nice week as well, getting a little bit extended. And Electric Arts, could have picked it up here. I think I talked about it off the 50-day moving average a couple of weeks back. So that's why this one made it. Now let's take a look at TradeStation, and then I want to turn it off because I think I'm getting using up too much of my bandwidth. So in Elder, green is a buyer hold, red is a seller hold, and blue is sort of dealer's choice. We've been watching this over the last couple of weeks, and I was concerned that, one, it was up near the top of its channel, and it's pulled back some. It is green in all time frames. This is the NASDAQ, which is very bullish. But one of the things I talked about before was a negative divergence. And you could see it's popping out to new highs here. and it's not popping out to new highs on the MACD histogram. So there is clear divergence in the MACD histogram on the NASDAQ composite, which might be indicative of potential problems to come. So let's shut down this trade station so that I don't have to, hopefully I won't kill my bandwidth and be able to last a little bit longer. Computer hardware, I think Apple had a good week and all the stuff going on with Dell, and then a potential breakup of HP. So we'll look at a couple, and I want to look at the 3D system. So here's Apple. Now, I like to buy puts, and I like to buy contra ETFs rather than short individual stocks. But here's a stock that this 50-day moving average. I would not be surprised to see a run up to the 50 unless the market totally rolls over. And then if it can't break above the 50, an opportunity for a shorting opportunity with a goal of taking out this prior low. And you could see it's made it up, hasn't made it all the way, pulled back, made it up, pulled back. So this is still in a downtrend, and even though it had a 5% up, a number of positive days, I get a little bit nervous about Apple. Dell, as you know, a lot of hullabaloo about a takeover by Mike Dell, Microsoft, and others. Not going to say much about it. As Kramer says, it's an arbitrage play. HP, in a downtrend underneath the 20-day moving average, had a good day on Friday. I think sympathy related to the takeover of Dell. Don't know much about NCR, except it used to be a cash register company. Actually, from a chart perspective, had a gap up, pocket pivot, sort of a spinning top, getting to the top of the high jump. So this stuff worries me. Earnings makes money, although its earnings per share growth is slowing down. A big kahuna. Very bullish looking chart pattern, but getting extended. One to point out 3D systems. This and Stratasys have been darlings of the market this year. Sometimes I get worried about stocks like this because they're starting to slow down their growth. You could see triple digits here, and now getting down to double digits. It trades at a big multiple of 65, does not pay a dividend. But they're also this one and Stratasys are the originators or the leaders on new technology called 3D printing. And I know from canceling days that a new technology is often something great that can propel a stock. It's pulled back hard, as you can see, down to almost its 50-day moving average, which gave a great buying opportunity. It's moved up. We're interested to see what it does this week. Right-click back. Internet software and services, change index group. LinkedIn, take a look at LinkedIn and Open Table, and maybe web.com. So LinkedIn had where'd you go, LinkedIn? So LinkedIn is the leader here. It had a huge day on Friday. It just totally blew away earnings that came out Friday. And you could see a Bible gap up near the high jump, kahuna, massive volume. Even though the stock is extended, I almost get a feeling that it uses those big earnings to start to move up more. Here's a weekly stock. Definitely as it's extended on its relatively nice, it's had a really flat period of time for months, and it just had a major liftoff on Friday. A couple of other things in the space that lifted off on Friday. My wife and I are big fans of Open Table. We use them constantly. Gave us one of those nice patterns. Oh, come on, Jeffrey. With a pullback to the 50-day moving average, and then off of that moving average, a pocket pivot, Bible gap up, and a kahuna with big volume on Friday. A lot of very bullish things appearing here. And then the other one that I saw, I don't know this company, and it's funny, I brought up a while back that Virgin Media, I don't know if anybody bought into that, but they got taken over at a nice premium this past week. www never seems to do much. It's got decent earnings per share growth. Had a Bible gap up and a kahuna on Friday with huge volume after earnings. Might be another one in this sector to watch. So a lot of interesting things going on in that internet software. Now we're going to get into semiconductors. Semiconductors also starting to move. There's a 3x semiconductor direction bullish that looked interesting as well. We'll get a couple of these and then we'll go on. Microchip technology, buyout will gap up, pocket pivot, massive volume. Don't be mistaken by the red candle. It just means it closed lower than it opened. There's still a huge up day, up 7.22%. Texas Instruments had some nice earnings, I believe. It's had a nice move since October. Had a kahuna volume in on Friday. Near the top of its high jump bar, which might be a little bit bothersome. Earnings per share growth not that exciting. Turns out it may not be the growth that matters. It may be how you perform based upon expectations. NXP Semiconductors, don't know this stock from Adam. It's had some very nice earnings growth the last couple of quarters, and next quarter a nice move up, but near the top of the high jump bar. A lot of extended stocks. Now we get into some of the energies. I hope you guys have been in oil gas refiners. Throw darts, pick one, you made money. And if you haven't been, well, not that we didn't tell you over and over again. Tesoro, one of my favorites. It's got some earnings coming into the stock. And these guys trade at multiples of 8 or 9. Some pay a dividend, some short interest. They've had a run related to high Brent crude and some of the issues that have been going on with refiners being damaged by Hurricane Sandy. And you could see just a massive move off the 50-day moving average. So here going from about 41, 42 up to 54. So that's about a 30% move. Now let's do it the right way, Jeff. Let's go from our green candle low on the 50 up to the high of the close on Friday. 34% increase in 22 days. Well, Jeff, I didn't get that one. How about this one? Holly Frontier. Bruce on the board, when I said to buy Western, he was into Holly Frontier. I only said to buy Western because of a green candle low. The same type of a big move. Now, these moves are starting to get kind of big, and the high jump bar is coming into play. Some of these, like Holly, have some big earnings coming into the stock, 1.4% dividend, multiple 7.4. These historically trade at very low multiples compared to their growth rate. Beautiful move there. How about another? Bolero. It's already starting to perhaps give a little bit of pause to refresh, but also very extended. Northern Tier Energy, don't know this one. This is a smaller limited partnership refiner. Makes a lot of money. Not too much is known about it. Trades at a higher multiple. Pays a dividend of 20.4%. You ought to wonder about this one. On the other hand, you take your risk. Don't know this guy. Western Refining is one that I like. And almost on the same day, all of these stocks started to move. So you go down here where its green candle low day was, up to where we were on Friday. And I've got a bunch of this one up 38% in 22 periods. You can pick one. Calumet's another one I have. Now this one is different. This one has not had a big run. It's had sort of a shallow saucer here, and pocket pivots and a gap up on Friday, everything turning green, not overly extended, a bunch of kahunas coming into the stock. Still like Calumet. As I said, it's one of the ones that I currently have. DK is another one I have, and DK broke out over the last couple of weeks as well, and from its low up here, 49% in 20 days. So this has been a great place to be fishing for stocks and refiners, and they remain a very strong group in HGSI. Movies and entertainment, these have been things like Lionsgate and others have done very well. Don't know these very well. Let's take a look at News Corp and Time Warner. So a little bit of pullback to the 17. Nice run up on the 17-day here. Kahuna on Friday. This is News Corps. And Time Warner, lower left, upper right, pretty tight looking chart. Kahuna on Tuesday, volume, Tuesday, Wednesday, everything green. I still like the earnings per share growth in this group, but they've done well. And we saw Virgin Media, I believe, in this group not that long ago. Oil, gas, equipment, and services continue to be in the top 10. Yeah, these guys, a lot of these guys have had some runs already, and some of them are coming back from some very ugly chart patterns. Here's McDermott, deep pullback into the middle of November, and a run up since that time of the viable gap up on Friday, up 39% in 56 periods, everything turning green, breaking out perhaps to a new closing high of late. Great earnings per share coming into it next time. They still have some to run. I've been playing with Halliburton. Just one of these stocks with crappy earnings per share growth, but they make money. You can see lots of negatives here. And some of these, I think, started to move with the Horizon platform settlement with Transocean. And you could see since it bottomed back here in November, like a lot of others, up 38% in 58 days. So another nice place to play. We talked about this a couple weeks back. And then oil, gas exploration. So despite all the things you hear negative about gas, these stocks have pulled back and seem to have been making some more runs. And take a look at a couple of them. And you could see a nice move up here in Pioneer Natural Resources. The earnings per share growth very negative. I think these things grow more with supply and price of gas and oil than they do with anything. Concho, CXO, this one likes to get above 100. Every time it's pulled back for quite some time, it has a tendency to pull back and run up, and it's running back up to 100 this week. Okay, in the 10th place there, let's see. Asset management. You know, I don't know enough about this sector, but I can tell you some of them made it to my watch list today, and just seeing any of these are worth talking about right here. Just take a look at State Street, and then maybe Wisdom Tree. I mean, certainly a leader, run from 40 up to 56. Getting a little bit of basing here. Everything is green, makes money with sort of muted earnings per share growth. Little dividend, trades at a multiple of 14. There are a number of them that look like this. Wisdom Tree is a cheap stock. And the most interesting thing about Wisdom Tree is I didn't know that Maria Balterama is married to the CEO of Wisdom Tree. I wonder if you met her on the show. Everything is green. Had a big run up from, from 6 to 9, that's about a 50% run-up. Good earnings per share growth off of a small number, trades at a multiple that's very high, and no dividend. So what's to the downside? You can see a number, oops, that's not what I want to do. I'm sorry about that. Where we had 80 or 90 groups, let me see, I forgot already. We had 81 groups that were up. We have only 19 groups that are down. More evidence, frankly, in my mind, that the market is strong. And you can see where the market is weak. No surprise, gold, coal. Now, what did surprise me was building products and home building. And I think you may have some potential pullbacks that look good here. So let's look at home building, and I'll show you what I'm talking about. I'm just going to go through 5 or 6 of them. And my argument would be is that they might be giving us an opportunity to buy them again. You could see Lennar is currently in an uptrend. It has a tendency to pull back to the 50, sometimes a little bit loosely, and bounce. It's on the 50, sort of a touch the 50. I potentially, I'd be looking here for a green candle low, a bearish engulfing pattern, a pocket pivot, a Bible gap up, something that's going to tell me it's changed its character, but it's at a place where I think it likes to reverse. So it's something that I'm going to be watching. Lennar. Here's Pulte. Same type of a story. Getting ready perhaps to give us our setup off the 50-day moving average. Here's DR Horton. Stronger. It's sort of almost a flag appearing there, but it's not run up enough so it would be a flag, but sort of basing sideways, hasn't pulled back much, good earnings per share growth. And one thing I like about these stocks, I'm going backwards here to Pulte. Look at the earnings per share growth. Here's Lennar. Now there is some talk about properties being more expensive, loan loss provisions being higher, and reasons why these stocks sold off. But it's hard for me not to look at these patterns and say, interesting. Here's one that's broken down, and this is MI homes. And you can see sometimes that 50-day moving average does not hold. I wouldn't want to be in that one necessarily. And then the other one I wanted to look at was Toll Brothers. Again, may not give you much more than a pullback on this. All of these have great earnings per share. When housing is done, these stocks will get hammered. I believe that housing is done yet. Now, I also like to see things that support housing, and they're also on this list, and we'll go down to building products. And specifically, I'm looking for USG, one that I'm a current owner of that had a loss of $1.50 for the week. And you can see it's setting up with a doji right on that 250. And this is why it's called free parking, because if you go back to August, every time it's hit that 50, it's gone up, 50, 50. So it's at the 50. What do you think it's going to do? Great earnings per share growth coming into the stock, a turnaround stock. I think the stock's going up. I may not buy it without seeing the pocket pivot or something off of this 50 or a kahuna, but it makes it to my watch list as something I'm going to look at. So we looked at top-down analysis. Another thing, when I started, I always get confused on these things. I talked about a group inclusion filter. And I talked about how I misspoke, but when the group inclusion filter, what I can do is I can identify what historically for me are good lists. So I'm going to do this from scratch. I'm going to go into smart groups, strategies, morales and captures. I'm going to pick pocket pivots. I'm going to pick best criteria, ERG 240, growth stocks, HGS 100 leaders, quarterly EPS acceleration, and strong EPS relative strength and fatigue high. So I picked 1, 2, 3, 4, 7, 8 different smart groups. Each smart group is populated by the program with up to 30 stocks that meet certain criteria. Now, the hypothesis here is that these are the best of the best. So if a stock is in all 8 smart groups, it must be a great stock. So I'm going to look to see if there's any stocks that are in most of the smart groups. So let's do these, and then I'm going to create a group of the top 5 of them if there are. All right, so hit this, and I'm just going to call it test. Yes. So it's looking in those smart groups. Nope. And Web, which we looked at, CBR, which is a refiner, Calumet, which is a refiner, Fleet Core is one of the ones that I like a lot, NCR we looked at in the semiconductors, Gallup is a refiner, I don't know, Home Street, gaming stock, car dealer, and asset management. So some of the good ones that we picked, you could have found, and you could see it's telling me how many smart groups the stock made it in. Here's Holly Frontier. So I only looked at a couple of these. I really like United Rentals a lot as well, another one that I currently am in. So one thing that has happened is, here's our list, the top 5 stocks. So we've looked at most of these already. Let's look at Fleet Corp. This is a stock that's got an uptrend that got a little bit of jet fuel applied to it last week. With the Bible gap up on Friday, huge volume at Kahuna. I mean, you know, don't take a rocket scientist to figure out they probably had earnings come out, or they had an acquisition. Let's see. Q4 2012 results. So good earnings, big move. And, you know, you wonder, is this the beginning of the end, and will it open down and start to create a evening star, or is this the beginning of another leg up? When I see the volume, the earnings per share growth, the Kahuna, this is a very interesting stock if it trades to the open on Monday. Now, in the texture of a market that's rolling over, I might be a little bit nervous. So you see how just doing that simple thing, I identified the rest of them are stocks that we looked at today. So I have my buy list. Let's take a look at that, and maybe look at a couple other things, and then I'm going to say goodnight and be done within an hour. Here are the ones that I liked as a buy list this week, and I'll look at a couple of charts. So a couple of things to notice. 1, 2, 3, 4, 5, 6, 7, 8 refiners made it to my buy watch list. 8 refiners. Where do you think the strength of this market is? Refiners. Home builders, I actually picked 2, but these are pullbacks, hoping they're going to move up. Construction and farm equipment looks strong, and it has been strong with the Tractor Supply and Cummins, 2 stocks that have already had a nice run. And then a smattering of other things, including some biotech. It was that USG I liked before. So let me look at a couple of these, and then I want to go into EdgeRater for a second, and we'll say goodnight. United Rentals, what a beautiful chart. This is a stock that had great fundamentals. I've been into it a while. And it announced an acquisition back here of one of its competitors. And you could see how it sold off to the 200-day or 50-week moving average. And I thought that was strange because all the things that they said was how much synergy there was and how much cost they would take out. And you could see that it did kill their earnings trajectory here. But they consolidated, they're running well, and what a beautiful stock pattern. And it's had some reports and firms talked about it. And you look at it, it's growing at 50 times earnings, and it's trading at a multiple of 14.6. That's a lovely chart, one I think that goes higher. So anything else that I liked here? People know that I've been a big fan of Celgene. Celgene had a drug approval on Friday, which is why it popped up with a Kahuna. They've got some interesting data coming for Revlimid in the front line. If the data is positive, then the EU will approve it, and the stock will go to their 120 target. If the data is negative, it probably goes down to the 50-day moving average. So it's at a little bit more risky time, but I think the risk is to the upside, which is more likely not to the downside. Buy it at your own risk. Kramer likes that, and so do I. This is really the hepatitis C company, the HIV company. They want to get into oncology. They got some earnings coming into the stock, like Big Pharma. It trades at a higher PE than most drug stocks at 23, lower left, upper right, and I like this company a lot. Regeneron is broken down, and here's one that did not hold at the 50. Now, if it can get back above the 50, I might be interested again. It might also be rolling over and had its day, but you can see massive earnings per share growth in Regeneron. And I don't usually buy stocks for a 200-day moving average, but sometimes I like to bottom fish. So here's Family Dollar Stores. It makes money. It's been in a fairly profound sell-off. The weekly bongo has turned positive. You can see the group is going up. It had is this an early Morningstar pattern, perhaps. It's got to get above that 17-day, but it could run all the way up to that 200-day moving average. It could have a kahuna. It's not for the faint of heart because it's in a downtrend, pays a small dividend. I call that bottom fishing, not HGSI. Piper Jaffray I thought looked interesting. What a beautiful pattern. Maybe it's too late, except it's got great earnings per share growth coming in and in the stock. Trades at a multiple of 18. All these stocks had issues related to the last market meltdown and some of the legislation that came in. But this one might be one worth looking at. Goldman Sachs has certainly had a nice run as well. Again, a big pharma or bigger pharma stock. Valiant has been in a very powerful move. Not quite at the high jump. Everything is green. Ignore that. It is making money next quarter. So it's growing at 30, 40 times. Trades at a multiple of 16. And they've done a lot of acquisitions. And, it's a Canadian drug company that, to me, seems to have their act in order. And then I guess I hate to put this one up there. If you don't mind buying tobacco stocks, Philip Morris, Altria, that, and this one all made my screens this week. So it has earnings per share coming into the stock. It trades at a multiple of 28. You're buying a stock that's below the 200, which is a negative, but it looks to me like it's got that kahuna volume coming in, potentially runs up to that 200. Pays a 10.2% dividend. It's a pretty nice dividend for a cheap stock. So $1.60. That dividend gives you about 10% downside protection. So if you're not objecting to buying stocks from companies that hurt people, tobacco stocks, then that one looked interesting. Like I said, the entire sector was in there. So enough of that. And Edge Rater, people know I like to look at the buckets. And what do I learn from the buckets to this week? That we're much less overextended than we've been. So even though the market's extended, only 75% are above the midline in the Bollinger Bands. We were up close to 90% when I looked the last time. And only 10% of them are above the upper band. If you go back, show you what extended looks like. Probably the last time I did this. I think this was at 87%, 15% above. And here's an 89%, again 15% above the top Bollinger Band. So we've come back a lot from our overextended status. So if you want to be bullish, the indices are all pointing up. The market, the lesser resistance seems to be up, and we're not so extended that we've got to pull back. I think this has been a market long in the tooth, as Ian points out tonight in his blog, and I don't want to forget that one. That's a great freebie. If you go back to HGSI's website, and you go to blog, one of our truly brilliant men of our lifetime, Ian Woodward, puts a no-cost blog up, and he's just got so many followers. This guy's just brilliant. And he talks about where he thinks the market's going, gives some targets. So all I got to do is go to HGSI.com website and click on the blog, and you can see Ian's reasons. Now, a lot of people wonder about these green candle lows and the other scans I do. What I can give out, I will give out at the HGSI meeting for those that attend. Unfortunately, most of the indicators, or fortunately for the person that writes them, that I've accumulated in TradeStation are proprietary and they're protected, so I can't hand them out. Edge Rater, I did ask Chris, and Chris was nice enough for me to build in green candle lows as an indicator. So one thing that you can do is I'm going to look at all securities, and I'm going to just throw this in here, and I'm going to hit run, and it's going through all securities, and what it will do is it's going to give me a list of green candle lows. So these are the green candle lows for Friday. Now, that's a big list. There's 94 of them, and you can go through them if you like. Or if you'd rather just trade S&P 1500 stocks, you put that there and hit the button, and there'll be a lot less to look at. So that's built in as our red candle highs, which is the opposite. This is often a topping signal for me. And if I hit, and what I'll do every night is I'll run these, and then I'll look at them in HGSI or look at them in EdgeRater. It's a wonderful charting platform as well. And you don't have to take my word for it. You can do a number of different back testing techniques using EdgeRater, testing out your own favorite indicators. Well, I think I've accomplished what I wanted to accomplish tonight. And what I do, just lastly, is I take those stocks in my buy list, and then I put them into different categories, and then I see which category is working. Is it going to be stocks that are extended? Are they going to continue to get more extended? Are they going to be the ones with breakouts with big earnings? How about pullbacks? A pullback that I call ready to run will have to have a momentum indicator such as a kahuna, big volume, pocket pivot, bullish engulfing pattern, tells me it's ready to run, waiting for signals, waiting for one of those, and I showed you vector group as an example of my bottom fishing. And I'll put these into a trade station, and I'll monitor them when I can during the day. And what I'll do tonight is, for example, I'll probably want to go nibble on some home builders. And what you can do in TradeStation is you can put conditional buy-in that if it hits a certain point during the day and I can buy the option at a specific price, it'll trigger even if I'm not at my computer. On that note, I want to thank you for your patience. Apologize for my flub up in the beginning. Always got to have a flub to know I'm human. And you all have a wonderful night. And be safe, trade well. See you next week. Good night.